You want it? We have it. The hottest mortgage and real estate strategy broadcast in the nation. A Smarter Way Home with your host, Danielle Boote and Victor Bals. 50 years combined experience, ranked in the top 1% in the nation for home loan originations 2020. Promise to expand your knowledge, utilizing creative mortgage financing and home buying strategies. Build a bridge for a better quality of life. Get your brain cells firing for a smarter way home. And welcome to A Smarter Way Home. We have some very cool, modern mortgage and home buying strategies for consumers and real estate professionals alike. I am your host, Victor Bals, licensed loan officer, and I am here with my co-host, the wonderful, the loan officer extraordinaire, Mrs. Danielle Boote.
Good morning, Vic. How are you?
I am very good today, and yourself?
I'm fabulous.
Yeah, I woke up this morning. It was my wife's birthday, and I forgot a little bit about it. And I heard my son say, "Oh, happy birthday, Mom." And I thought, oh, yeah, that rang a bell. So I went down and said, happy birthday. And she is now 29 years old again for the 29th time. So you can do the math there.
Okay.
And but I've got her a gift, and we're going to take care of that. And we're going out to dinner tonight.
Very exciting.
And our dinner is actually my kid's soccer banquet. So I'm
special.
taking her out for a free meal.
Is it pizza or pasta?
No, it's over at Crystal Gardens. It's I don't know, whatever they have.
That's big.
We're going there, and then tomorrow we're off to Chicago for a soccer tournament. But today we have I think a pretty cool show. We are going to discuss Zillow. Today is Veterans Day. We're going to talk a little bit about VA loans, but also we have a very special guest, a fellow loan officer, licensed, over 20 years experience. We have Jennifer Coppola from Highlands Mortgage. Good morning, Jennifer.
Hi, good morning.
Good. How are you? Yeah, well, we're glad to have you because today's one of the first days we're ever going to talk about where we work. We've never talked on the show about where we work and what we do, and we're all at Highlands Mortgage. Jennifer, could you please tell us a little bit about yourself and what makes you tick?
Oh, goodness. Really, for me, it's definitely my customers, customer service. It's the relationship building. For me, it's seeing them in the grocery store. It's seeing them at Target and knowing that I worked with them 10 years ago and everybody's a friend and family.
Well, so how long have you been in the mortgage business?
25 years.
25 years. What did you...
She was 12 when she started.
What did
Maybe
you...
8. I'm not sure.
What did
right
you...
after my algebra class in high school.
What did you actually do prior to mortgages?
Actually, I started at First American Title.
So you were in the title industry.
I was the title industry. I was a closer.
You were a closer.
There.
And what gravitated you towards the mortgage industry?
What I saw was the situations at closing, that necessarily the clients didn't have their questions answered. They had questions at the end, and the loan officers didn't really attend the closings. And I would answer them or find the answers. Okay. Decided that that's the avenue I wanted to be in.
So what year did you actually get into the mortgage industry?
1996.
1996. So you've been through a couple of the real estate meltdowns.
Yes, I have.
So how did you start the business, and how did you grow your fan base or your customer base?
Just like I said, customer service. I want to help, and I want to listen to their stories and listen to what they need. And sometimes they don't exactly know what they need, but it comes out in the conversation. And I try to listen to that and tackle that.
So how do you actually connect with your clients, and how do you actually discover their needs, their wants, and objectives?
Conversation. It's not a checklist. Even though we can do everything electronically now, 25 years ago, obviously we couldn't. But it's just conversation, and it's getting to that comfortable piece where we just talk. And we talk, and it talks about their needs and wants, and I get everything I need out of it.
Good. And how do you keep your customers post closing? What do you do after the closing?
You know, now it's a lot easier with social media. You can see everything they're doing, their families, their events, everything about them, and you can really easily stay in contact and let them know that, yeah, I'm not just here for your financial need of a refinance or a purchase transaction. I'm here if you have any questions financially or you need a referral of some sort. I love the social media these days. It really keeps in contact with everyone.
Okay. And you came aboard and you're at Danielle Boote's office as
am.
myself. How did you and Jennifer connect?
Well, that's kind of a funny story.
Well, let's hear it. I like funny stories.
Well, we both lived in Pinckney at the time. Jen is still in Pinckney. We're just over the Pinckney border now. And I knew Jennifer casually through Women's Council of Realtors and other, association events, things of that nature. But other than saying hello, we never really chatted much,
Yeah, it was surface conversations.
Yeah.
Hi, how are you? The kids, just we would see each other often. And
So you were respected competition? Is that fair to say?
Yeah.
yeah, absolutely.
Yeah. And was it 6 or 7 years ago now, we bumped into one another with our kids and Jennifer's husband at the Hamburg Library taking boater safety. We both had just bought boats. We needed to take boater safety, and it was like a 6-hour, 8-hour course. And my son, I think, was like 11. Jen's kids were little, and we were sitting at tables across a little aisle at the library, and I think I glanced over and thought, oh, that she looks familiar. But it was like out of context. It wasn't in real estate. And then Jen ended up coming up to me on a break going, "You're Danielle Boote, right?" And I'm, and I'm like, "Yeah." She goes, "Remember me? I'm Jennifer Coppola." I'm like, "Oh my God, I knew I recognized you." But, with the kids and the husband, it didn't all put 2 and 2 together. So we just chatted a little bit, and I don't know, again, still saw each other socially a little bit here and there. And then about, I don't know, was it 3.5 years ago?
4 or 5
4
years ago, we started talking.
She called me
more
once and
detail.
said, "I want to have lunch or a glass of wine." And I said, "Okay." So we went out one evening and had a glass of wine and became friends and, just kept in touch. I mean, one of the things that I have always felt, especially with other mortgage professionals, is, you gotta be friends with everybody.
Yeah. Absolutely.
Well, we have a lot in common. I mean, same industry and mothers and wives and same city.
Yep.
And giving back to the community.
Hobbies, giving back to the community. Yep. We'd bump into each other at the charity events together. And
Yeah.
It's funny because when I got in the industry, I knew of Danielle Boote. We were, respected competition, but never in my life I thought that we would end up being together this late in our careers. And along with you, I knew of you, but never thought we would all be working together on the same page, the working class, working for the working class in a sense.
Absolutely.
There.
Well, after we started becoming friends, we started talking about a lot of other scenarios
in
and
business specifically.
and realized that we have a connection a very long time ago.
Oh my gosh, I forgot about
Yes.
that.
Uh-oh.
Yeah,
I feel it coming on. What do we got?
Forgot.
Spill
So
it.
I got in the business in 1989, and I worked at a company called Republic Bancorp Mortgage.
Oh, I remember
that
them.
that no longer exists. And I worked at an office in Plymouth. And I was there about 3 years. That's where I cut my teeth. That's where I met Sue Conklin.
That is our senior underwriter for
Yes.
you listeners.
So, I was 19 years old, very young, got in the business, and in a few years I got married, had my first child, and ended up leaving that company to go work for a company that would allow me to work from home, which was totally unheard of in the
Heard of
early
back then.
90s.
Yeah.
Yeah. So, and then with Jen and I becoming friends the last 4 or 5 years, we were telling each other our backstory, and Jennifer goes, "Oh my God, I used to work at Republic Bancorp Mortgage." So we had the same manager. We knew the same people. I think Sue Conklin was at corporate by then, and not in the Plymouth branch. But Jennifer and I actually sat at the same
desk.
cubicle.
Oh,
Same
really?
desk,
Same
same
desk.
cubicle. Just
However
a few
many years apart.
Yeah, just a few years apart. So, it was funny because she grew up in Pinckney. I was in the Plymouth Canton area. So for this girl from Pinckney to go out to Plymouth that many years ago.
I followed a boy.
Oh, okay. So
I lived in the city.
So that was just a small world, and we had a lot. Again, same circles. The mortgage business in Detroit is very small in most retrospects. That everybody knows everybody, so you better have a good
So
reputation.
we're interconnected for sure.
Yeah.
Well, after all of us 20 years plus in this industry, now we're all together. We're at Highlands Mortgage here, and I have in my entire life, never seen a culture like the loan officers we have. You know, we all have an average of about 20 years experience in our office, but yet there's no competition amongst us. I've never been in an office where there wasn't competition. We all work together, and there's many real estate agents out there that, and they may use me, they may use you or something, but we don't have that animosity. It's kind of a very cool culture. Can
Actually
you guys
build each other up?
Yeah. And can we discuss that a little bit? What is your feel of the culture of our office in Highlands?
Well, Vic, you know, you and I had a conversation, about 2.5 years ago, when you needed to make a change and hadn't planned for it. And I had just made a change in my career direction. And, you know, we said, could this possibly work? And I actually had no intentions of growing the branch, you know. And I had been talking to Jennifer for, I don't know, 6-9 months, a year prior to that. And really didn't know where this would lead. And when you and I first spoke, I said, well, the only way this is going to work is if we check our egos at the door, you know, and really decide that we will be stronger together than we are individually. And it was the same conversation I had with Jennifer, who was coming from a different working environment, smaller company, a broker environment, where you and I came from similar kind of companies with a mortgage banking division. And I said, well, it's either going to work or it's not going to work. And when you and I, Vic, were first talking about the potential of you joining Highlands, I remember Jim and I going out to dinner, and I said, well, this is either going to be the very best thing that could happen to all of our careers, or it was going to be the worst. There was nowhere in between. And I know I was communicating with you as well at the time, Jennifer. So it was like, well, this has got to work or not. And we're all very different personalities, different styles of business. You know, typically, sales professionals are very dominant, driving personalities, which can be difficult to assimilate with and to work with. And, you know, I think that everybody that has followed, you know, Vic, you came first, you brought your team, a few other people followed you, Jennifer came shortly thereafter. Everybody embraced it and said, we're stronger together than we are individually. We also back each other up, which is unheard of truly in this industry, that you could trust someone to say, hey, I'm going to be on vacation, or I got a family emergency. Can you handle this for me? Or can, you know, whether it's something around the office, whether it's something personal that somebody needs help with. I mean, we've all become, you know, I'm very proud to say friends personally.
Absolutely.
Business partners. And, you know, here we are marching ahead into our 3rd year with Highlands, and we've created an amazing culture that, you know, honestly, everybody that is at our office, I think from a sales perspective, has doubled their production in the last 3 years. It's sustained growth regardless of market conditions.
Our reputation in the community is growing as a powerhouse, basically, in the county.
Yeah, so it's been really exciting, and it's exciting to see everybody's growth. And honestly, we have the best support team that I've ever seen in my entire career, and that's also what makes it work.
Yeah, you know, I got to go back because you said about checking the ego at the door. I remember when I had left my previous company, and I come pulling on your coattails. Hey, Danielle, I need a safe harbor because, you know, I wanted my own branch because I'm the manager. That's my ego, right? And as we came and we started to work together, I started to check that ego at the door because I didn't really want to be a branch manager. I wanted to be more in the sales side, and I seen your strengths as a manager, and I said, you know what? This could work, and I no longer wanted my own branch. I wanted to say, I want to join up with Danielle, you know, and we've become very good friends and business partners and just everything. So it's not about the ego anymore. Right. You know, so that was a growth thing in mine.
It is a growth. It's difficult to let that go. Danielle.
But
I
had
that position.
No, actually,
I don't want that.
Actually,
I feel for her.
Look at what Danielle does. I said, I don't want that.
No. Oh, great. Thanks, guys. Well, I think the big thing is trust. Yeah. And I know in this industry, 32 years in, the majority of any relationship I had with my employer was not trustworthy. That is something that trust has to be earned, it can be easily lost, and I won't even go into that. We could talk hours about the horror stories, especially being a female professional in this male-dominated industry. I won't even say anything further than that.
Right, that's enough said.
Come on, man.
Enough said.
No,
man.
there's challenges.
So if you can't trust, ultimately, who you work for and who you work with, right? I look at it as serious as the relationship with your spouse, right? If you cannot trust your spouse, does anything else matter? Period, right? Yeah. Trust is earned, it is built, and it has to be maintained through honesty, integrity, and transparency, whether it's a business relationship or a personal relationship. And once that is gone, you have nothing. How do you work for somebody that you can't trust? How do you work for somebody that's going to lie, cheat, or steal? Right. And with the Highlands management team in Dallas, I flew down there before I made the decision to join the company. They were very trustworthy. They seemed very honest, and they built the company around servant leadership, meaning they are there to serve. They all were originators, every single one of them, at the top management level. They weren't just people that thought, oh, we can make a lot of money in the mortgage industry. No, they realized the importance of home ownership. They realized the importance of taking care of their employees as well as their customers. In fact, yesterday, they got word that they were voted the number 2 workplace in the Dallas market again. They win this award. They're either 1 or 2, and they have been for many, many years. And the employees of the company are voting on this anonymously. So, employees are standing up and saying, this is an outstanding company to work for. Management is outstanding to work for. I can get right to the top if I need to. And honestly, I've only called the president of the company once in 3 years with a question. He calls me from time to time and we chat. I can always get a hold of, our direct sales manager. I can go to the top of underwriting, the top of management in a second. My calls are returned. There's never really a black hole, which is huge in the industry, right? You can call somebody and crickets for days. And if you have a problem that you need resolved for the benefit of a customer, we need to have that transparency. And that's what we enjoy from Highlands corporate-wise, and that is why we thrive the way we do, because we can get to the top when we have a challenge quickly, we resolve it and move on.
You brought up a couple points there about trust, and you brought up some things about family. And I just actually had this discussion with my team yesterday. Over the weekend, I flew out to Los Angeles because I'm taking mortgage coaching. And I went there to find out everything I'm doing wrong, And I came back within a completely different attitude because I found out everything I'm doing right, And as I look at my team, and we had a team meeting yesterday, my team is my family. You Highlands people are my family. Sure, I have my family at home, but I have my family at Highlands. And I need my family at Highlands to take care of my family at home, to meet their needs, wants, objectives, and all their goals. I need my Highlands family. Many times I'll get a call from a realtor or a customer saying, what a great job I did. If it wasn't for my team behind me, a loan officer is only as strong as his team behind him.
Absolutely.
And so I have a whole new respect for my team, which I told them about yesterday. And it's that culture. It's what's behind us salespeople, the back end, the support systems, because us as salespeople are the singers in the band, right? But our support people are the roadies, the guys tuning the instruments, the ones playing the music so we can go sing our song and take care of our clients. And if it doesn't sound good, nobody's coming to the show. So I just want to thank the support system,
it's the support
both
system.
You guys, my personal team, because that allows me to take care of my goals in my life for my family.
And that's an exciting success story, Vic, for you. On our journey for the last 2.5 years. You came with the majority of your team. You have added one person to your team since you joined Highlands, and 2 of your team members, Beth and Monica, who are outstanding mortgage professionals, have risen to the challenge. I mean, we have taken Beth, your processor, and allowed her to double her production capacity and work less hours and give her a higher quality of life because of the systems and how our branch works and how our company works. So it's about the people. It's about quality life. I want you to leave on time. You work a ton of hours, but you leave timely every day to be with your wife, to be with your children, and you don't miss a sporting event.
Never.
You don't miss school events. I can't say in my entire career that I haven't missed things, unfortunately, because I didn't have the support. That was one thing. And I said the same thing to Jennifer. You know, we're all at the age, whether we like to admit it or not, you know, my baby graduated from high school in June and is off at college. You know, in the blink of an eye, your life changes, right? In the 5 years with your children, 10 years with your children, 18 years, boom, gone like that. Tomorrow is never promised. We need to embrace today with all the health, energy, vigor, love, trust, whatever it is that's important to you to fulfill. You know, our jobs are what we do to support our families.
Right.
It's a huge part of who we are,
It is.
but it all should complement one another. You know, whether it's, you know, Jennifer has the ability to work from home a couple days a week, which you never had at your previous company.
Never had that.
I mean,
ever.
you still have a daughter in high school and a son in college that is living at home. And he's a commuter. But you know what? How wonderful is that? That you can be there when your 16-year-old daughter comes home from school at least a few days a week.
Just to say for the 5 seconds, she'll talk to me that day.
Yeah.
How was your day?
Yeah.
I catch her.
Yeah. I mean, you had explained to me that in your previous world as a broker, you did not have laptop computers.
Did not.
Your software was not portable. You had no apps on your phone to support your business. And you would have to go into the office to get work done any day.
Would have to be at the office at all times. So yes, that was
You know,
all the time. We never would have made it through COVID.
No.
As we talk about that culture, which our office or our company builds that culture to give us the freedom to be with our families, to do that, it makes it a lot less stressful environment so we can actually give more attention to our actual customers.
That's exactly why I made the switch.
Yeah.
I went from broker to Highlands so that I can focus again on my clients.
Yeah.
Because that's what did it for me. The customer service, so I could talk to them again. I didn't want to be rushed, that I had to worry about
Other things.
and an underwriting issue on somebody else's file.
Yeah,
Or
give 100% customer focus.
Absolutely. And I'm completely back to that. And it's made a tremendous jump in my business again.
You know, it's funny because each one of my team members, as yours, has a customer where they discuss stuff with the customer. And as we talk about family and about stresses and that, I had a call yesterday from Beth, my processor. It was, I don't know, about 4:00 in the afternoon, and she called me up. It was a pretty stressful situation for her yesterday. And she goes, I just got to chill out. I got to call this customer back and let him know about this situation. I said, Beth, don't call the customer. You know, right now I can sense your stress, and if you call that customer, they may pick up on that. You don't need to do that. I go, isn't tonight supposed to be yoga night? And she says, yeah. I go, why don't you just pack it up right now, go do yoga, go relax, get your stuff together. We'll take care of this issue tomorrow. And she said, wow, Vic, thanks a lot for doing that. But at that moment, we were able to take care of our employee, go relax, come back rejuvenated, and now we'll deal with the issue and take care of the customer. It was
that time frame of calming down, you probably came up with 3 solutions.
Yeah, absolutely. Yeah, and actually this morning, prior to this podcast, we took care of the solution. So that worked out.
And the delivery is completely different.
Yeah, and actually Beth was there an hour and a half before work, all rejuvenated, calling me on the situation. I go, really? Wow, this is pretty good. Again, that's the Highlands culture there.
Well, it's allowing our excellent team members to shine.
Yes.
Giving them respect and giving them the ability to exercise their talents. You know, I say everybody in the branch, I'm like, I want people's ideas. this is not the Danielle Boote show, right? I love to get other people's ideas, or maybe we start with an idea and then it evolves and we come up with something so phenomenally better because we had everybody's insight or everybody's throughput. And, that's what's, exciting. Honestly, it makes it easier to manage the branch because I know I can call Jennifer, I can call Vic, I can call anybody and say, hey, I got an idea. What do you think about this?
Well, Danielle, but you do drive, whether you know it or not, you do drive a higher standard than anybody I've ever known. And in our office, we have many loan officers, and we had the opportunity to discuss with Barry Habib, and he has the certified mortgage advisors there. And I believe every one of our loan officers are certified mortgage advisors.
I think so. Yep.
And could you touch a little bit about who Barry Habib is and why we went through his course as certified mortgage advisors?
Well, Barry Habib is a mortgage professional that has grown and evolved through the years. He now currently runs a company called MBS Highway, and he has for many, many years. And I've followed him for decades. He started as a loan officer and has a tremendous talent for being able to read the financial markets, particularly the mortgage-backed securities. And he's come up with all kinds of really cool tools that as loan officers we use day in and day out to be able to look at the financial markets, understand what's going on, understanding how the markets and what's going on in the economy is going to impact mortgage interest rates, which is what our customers want to know. The age-old question is when somebody starts an application is, do we lock your rate in or are we floating your rate? What does that mean to you as a home buyer or a consumer maybe trying to refinance a home? Barry started this certified mortgage advisor, I believe, in the last 12 months. Highlands Residential Mortgage partners with MBS Highway and was one of the first companies to get on board. And Highlands encouraged us, but did not mandate that we earn this designation. It was a class that we took online. It was multi-parts and took many, many, many hours. I don't even remember.
It actually wasn't easy.
No, it was hard as heck.
It was, but it was so interesting.
Just a note, only 1% of the loan officers across this country have taken and passed that class and got that designation.
Mm-hmm. And it requires ongoing continuing
education. I am a better loan officer for it.
Oh,
I am not nervous of that question when someone asks me what's happening.
Well,
I can explain it.
Yeah, and I actually, with the Zoom technology and all that, I'll Zoom a client and we'll bring up the mortgage-backed securities and I'll kind of give a broad view of where the market's been, where it's going, and what I think is going to happen. And I'm getting smarter, and my consumers are getting smarter because they're calling me and saying, "Hey, did you see the mortgage-backed securities today? I think we should lock, Vic." And I'll look and go, "You know what? You're on to something here. Maybe we should here."
Well, it's we're coming off of a period where interest rates have been at all-time lows for about the last 18 to 20 months. The average interest rate in the United States over the last 50 years for a 30-year fixed-rate mortgage is 8.5%. We have been in the low 3s to under 3%. So I can comfortably say that in 1989, when I got in the business, interest rates were 10.5. What were they when you got in, Jen? Do you remember?
They were almost 10, so about 9.7.
What about you, Vic?
Well, my first mortgage was 10.5% in '86, and when I come into the industry, my first loan was, I think, 8%.
Yeah, which were,
and I had bragging rights. I had the lowest rate on the block.
Yeah, at 8%, you were pretty excited. You know, our first house was $71,000 in Westland, and our interest rate was 10.5. But Jim and I looked at it and said, well, you were paying rent and I was paying rent, so why don't we buy a house and see where this goes?
And that theory still works today. Yeah.
It does.
Absolutely, it's still better to buy.
So understanding, we're going to go through a lot of changes economically in the next 18 months because of what's going on with the economy. Interest rates will not remain at these low levels forever. The government has been buying mortgage-backed securities since April of last year due to the CARES Act, and that's slowing down. They're already talking about tapering, which is going to put the mortgage market back on a natural progression or natural path, and that we have not been on.
Is it fair to say that the government buying you're buying mortgage-backed securities is a way to artificially keep interest rates lower.
Correct.
Okay, for our
Correct.
consumers who are understanding the terminology, it's almost like a subsidy for milk.
It is,
in a sense.
Yes.
Yeah, so exactly. The government has been subsidizing the mortgage market to prevent it from crashing, which did start to occur when the country shut down. We actually saw interest rates. What were they at last year? They were in the low to mid threes, and then they went up to 6% on government loans within a couple of days.
Within a couple days.
That was right when COVID, when they
Yes.
shut
Right.
the country down.
Yes.
Because investors were worried that, hey, why are we lending money, low down payment money to first-time homebuyers on these government programs if they're all going to lose their jobs?
Right.
I mean,
Right.
assuming that, everybody's going to lose their houses. Well, the government stepped in multiple ways and solidified the market, prevented us from having a complete
They've come a
collapse,
long way.
which was good. It was much better than what happened in 2008.
Yes.
But we're going to go through a lot of changes. So a mortgage is not just a commodity. It's not just a number. It's a financial decision that requires us looking at your complete financial information and then coming up with a plan that works for you.
It's a tool.
I have clients still, even yesterday, I had the conversation with somebody looking to buy their first house. They had money saved and they were very proud of it. But when I looked at their credit report, and they're trying to keep in a price range to keep their payment in this low range. Well, I knew that they could afford more. I knew that they were probably not realistic with where they wanted to be. But you know what? I looked at their situation and I went, well, you got some credit card debt. Yeah, we're working on it. So I presented
debt management.
Let's do debt management, get you in a house, figure out what you really need to do. We'll create a triple win-win-win that will make sure that they're
Financially strong.
financially stronger by giving them this education and coaching and getting them a great mortgage at a great rate and into an amazing house that they will enjoy for years to come, but putting them in a better situation. And when I told this young man kind of the path that I was on, he was like, oh my gosh, that would really work for us.
So
love
by
that.
putting less down,
Yep.
able to get rid of some of that debt, and so you didn't give him a mortgage, you gave him a quality of life path.
Yep.
Why bring that baggage with you? His
Right.
cash flow is going to be less now by paying off debt than putting a bigger down payment.
Correct.
It's going to give him a
that
kick in the
is
step.
that is being a certified mortgage advisor. That is an angle that we take with all of our customers.
That is what
It's
we
not
do. It is
just
how we roll.
It's not just giving a mortgage debt. It's
Yeah.
giving them a financial structure.
Future.
When we go through those strategies with the clients, I treat it as if it's my own family because I
Yes.
practice what I preach.
Yes.
Yes.
You know, and it's just the right thing to do. If you want just a mortgage, call some online company, give me a mortgage. But with Highlands, it's give me a lifestyle.
Right.
You know, because we all want to retire, and retirement is a destination, or it's a journey, not a destination. You know, let's have fun in getting there.
Right.
You know, so very interesting, and I love connecting with clients when they have that aha moment and saying, "Oh my God, you should teach this." Well, I am. I'm teaching it to you.
Right.
Yeah. Yeah. It's a one-on-one thing. You know.
Very, very satisfying, though.
It is.
You know,
It
it is
is.
very satisfying. You know, as we start talking now, so today is Veterans Day. I want to touch a little bit about veterans on there. But also in the recent news, there is Zillow. Zillow stock went down 25%. Zillow is getting rid of their iBuyer platform. And I just want to get your thoughts on that. What do you think's going on there? And how is this going to affect real estate agents?
Well, I think the Zillow situation is very interesting. Zillow, everybody knows what Zillow is. You can go on there, you can search, find houses for sale, for rent, whatever. They've been growing that platform for, 8-10 years now. And they also have predicted values. That was the interesting thing with the Zillow website. Everybody would look for the Zestimate on their home. Now, I'm not going to say it was entirely wrong. You know, if you live in a subdivision where the houses are similar, it could be very accurate because it's going to be easy to say, okay, you're in a neighborhood, there's 150 houses and 10 of them sell every year. You know what your home value is. It's kind of cut and dry.
Right.
It doesn't ever work so well in areas where things are not all cookie cutter. For instance, in our area in Livingston County, Yes, we have some subdivisions that are similar, but the majority of our area is very eclectic. We have houses on acreage, houses on lakes. We have some homes in neighborhoods. We have homes not in neighborhoods. So it really wasn't always very accurate. And the more unique the property, the less accurate it's going to be. So in the past couple of years, Zillow got into buying homes. So you as a homeowner could go on Zillow. You could ask Zillow to make an offer on your home. So instead of putting it on the market, selling it to an independent party, you would basically sell your house to Zillow for whatever they wanted to buy it for. Then apparently what Zillow was doing was maybe painting the house.
HGTV style.
Yeah, they would fix it up, put a little rouge
in 30 minutes,
because
I think that's how long.
That's how long the episodes are.
30 minutes. They would fix up the house and turn around and sell it for more money. So, when you watch HGTV, what state are they normally in?
California.
California is a very different market than any state in the country. And California has enjoyed their real estate market, I would describe as being on a roller coaster, right? The values they shoot up and then they crash. They shoot up and then they crash. In the Midwest, we're kind of like this. Okay. We go, our average appreciation on real estate is 3 to 4% a year, which is the nation's average, honestly. And I'm not saying we know we've had a crash, but it's very rare. We're not on this pendulum.
They have the real highs and the real lows.
So apparently Zillow.
Well, we've been on a good swing the last few years.
We have.
So apparently Zillow their iBuying program has completely crashed, and they lost, I don't know, $300 or $400 billion in the last quarter, and they're going to have another massive loss in the third quarter, and they have laid off 25% of their employees.
I hear that's about 6,000 employees that they're laying off. That was a number.
Is that the number that you found? Yeah, I didn't find that.
And I think it was $5 billion they lost.
Is it? Okay.
Yeah.
Okay.
Yeah.
So the interesting thing is that we have heard in real estate, I don't know, for the past 4, 5, 6 years, people have said, well, aren't you worried about being a loan officer? You're not going to have a job in a few years. Everybody can apply for a mortgage online, upload their documents, get approved and closed, right? It's that easy. But they've also said the same thing about real estate. Well, we don't need realtors. All a realtor really does is unlock the door.
Little do they know.
Little do they know. So it was, the Zillow thing, and I don't think Zillow was big in Michigan as far as the iBuying program.
It wasn't.
Probably not at all. But if the amount of money they lost, they probably targeted some of the really hot markets.
They did.
I'm sure. Do you know what, Jennifer, do you know what states they were in?
Yeah, they had 3 or 4 main areas in Texas. It was the high end.
Okay.
California, they had Las Vegas.
Okay. That would totally make sense.
Absolutely. So they didn't have the regular market areas.
Right.
But it was a test. It was a testing center for them.
Right. But, at this point, it has completely failed.
Well, it has, but I think that we've forgotten that Zillow does not create any content. They don't come up with this information.
So explain to us what they do.
Basically regurgitate the information that they grab from the real estate systems. So you take it all the way down to the basis. When you have an agent that lists a property, that's where that information comes from. Zillow obtains that information and then presents it in this site for everyone. Everyone at this point in the last couple of years believes that Zillow is the end-all be-all of this is the information site. They've created it and they're giving us the information. This is the time frame that we're seeing that their algorithm for this iBuying program has failed. They thought they could predict the market. This is the first time that they were creating information. They failed.
Right.
That's huge.
It's huge.
Huge with the
This
amount of
is
money that
great
they put
for our
into the
agents.
system.
But
Right.
this has an effect on our current customers, because when we get the appraisal and it tends to come in low in this very, where these prices are going through the roof, they say, well, it can't be low because Zillow says it's worth this.
And this is what's happening now. Zillow is losing the credibility.
Right.
And that's what we need. It's really what's best for us
and I don't know if
and
we
our agents.
need to have them lose credibility, but we need to have a reality check. To me, Zillow is a barometer, not a thermometer.
Right.
Yes.
It is not the number one
You know,
resource.
And I tell my clients, yes, Zillow is a range. That's why it's free.
Well, you know what I noticed recently? You know how Realtor.com, which is owned by the National Association of Realtors, that takes all of the information from all of the real estate agencies all across the country. They were putting estimated values out on their site for a while, and now it's gone. You know, but here's the thing. You know, I live in a neighborhood where it's a lot of newer homes. Some of them are custom, some of them are semi-custom, and they can range in square footage for almost 2,000 square feet. I mean, my house is not exactly the same as my neighbor's, nor is it exactly the same as the person two door down. So, you know, if the Zillow estimate looks at the average of my neighborhood, yes, it's going to pick up on is what has sold most recently.
Right.
And if my house is bigger or better or has different amenities, you know, that takes a human being to walk through the house. Right. And go, okay, do you have Formica? Do you have granite? How is the market reacting to what your house is, which includes how it's decorated, how it was built, you know, what is the quality that you're putting into the home? You know, did you replace your windows with quality windows or did you put cheap ones? Were they installed properly or not? I mean, in our market, we occasionally see a roof that was installed improperly, right? Mm-hmm.
It's important in Michigan.
That's a roof is kind of important. And a home inspector will typically reveal that information to the buyer. But the buyer is going to want to know, you know,
what am I getting into?
What am I getting into? I mean, there is a cost to operate and maintain a home. And most people want a good one. Most people want a solid one. Mm-hmm. You know, those things all account for value. And you can't just, you know, have a drone fly over a house and take a picture and think you know what's going on.
Because it's on the internet,
But
this is the answer.
But me, even being in this industry for 20 years, I'll pull up my own address on Zillow, Redfin, Realtor.com, and there's all different values. And of course, I want to believe the highest one, and it hits me in that psychology of me going, mine's
as
worth
a seller,
because you know, and so. And I try to tell my customers, look, this is just a range. This is why we get an appraisal.
Absolutely.
Right.
You know, because we're going to get with, you know, plus or minus 2%, because an appraisal is an opinion, but it's going to be the best data we have with a local appraiser that lives near the area to give us a good representation of value, that if you're overpaying or not overpaying for a home.
And even an appraisal is a very difficult process. We could have a whole show about that.
Sure.
Because some appraisers, their opinion of value is not 100% relevant if they focus on one thing and not look at the whole entire market. You know, we've seen that happen before. But you look at it and go, okay, the market right now is shifting. And this is what I don't think Zillow anticipated. I don't care what state you're in. I don't care what the climate is. Real estate is not hot 12 months out of the year. It is always cyclical. So in Michigan, and typically nationwide. I was in Florida last week talking to a realtor, and he told me the same thing. He goes, oh no, November, December are quiet months. Why? Because it's going into the holiday season. People are getting busy with other things. Sometimes it has to do with the weather. You know, if we get a snowstorm in Michigan in January, it's going to shut down real estate. It does. Nobody's going to list their house, regardless of if they planned on listing on January 15th. If we get 10 inches of snow, they're not listing on January 15th. But all parts of the country go through these seasonal adjustments. Right now, even in our market, we are seeing sellers overlist houses. They watched what happened all year in 2021.
And overlist meaning what, Danielle?
They think their house is worth more than it really is. So they list it on the high end of the scale, and the houses aren't going to sell. And now we're seeing price reductions. And
take that. Okay, so you just stated that one may list their home overpriced. They're out there fishing for a higher price.
Yeah.
And what happens, again, with the psychology of a buyer, if all of a sudden that thing sits on the market for 10, 12, 14, 30 days, now people think there's something wrong with the property.
With it.
Yeah.
Right.
So, and I've told my clients this all year. I'm like, you are better off, if you have a house to sell, you are better off listing it in the mid-range of where that value should be. And the good realtors know that, you know, list it low, you're going to get a ton of activity. You may get multiple offers, and it will sell for where it should be.
Yeah, and I gotta hand it to the realtors, because I truly
They don't
believe
just open the doors.
a
then.
realtor,
don't.
a realtor
No, they
is
don't.
worth their weight in gold, because
Yes,
they're
they
gonna
are.
price it where it sells, because they have their thumb on the pulse
That's right.
of what is selling and for how much.
Right.
And they'll get more times out of not, they will get more money than you trying to for sale by owner.
Absolutely. Yeah, the for sale by owners in our area have not been moving at all. And, and they'll walk through a house with a seller and tell them, hey, you might want to think about this. Let's do this. Let's do this. Maybe it's packing away personal effects. Maybe it's staging the property a little bit. Maybe it's cleaning something up. Maybe it's painting something to make it look a little fresher. An automated system can't do that.
There's no personal touch.
There's no personal touch. There's no
We need that.
There's no relationship, and there's no who's truly advocating for the seller or the buyer. Nobody. They're just playing it like it's a numbers game, like it's eBay. I mean, this is a house, for God's sake. This is not a Fisher-Price toy from 1982 that you're trying to buy for some nostalgic reason. You're spending hundreds of thousands of dollars. You need to know what's going on.
You need someone to make a phone call to when you have questions.
Yes. Yeah.
You need that personal touch.
Yes. Yeah. So it's just very interesting. Artificial intelligence is getting a hip check.
Yeah.
In a very
think so, too.
expensive hip checked. And, so I think it'll be interesting
Well,
to
there's
see
other
where this
companies
goes.
that have that program. It's obviously called something different. So I'm curious to see over the next 6 to 12 months, what happens with those.
Yeah.
Do they have the losses, or are they projecting differently? And does it work for them?
Right. Right.
No, but to me, there's nothing better than the old-fashioned. Get a realtor, get a reality check, meet your loan officer face-to-face, because this is not a machine-driven process. This is humans. It's connections, buyers and sellers and families and emotions, and there's just too much involved to do this with any artificial intelligence, to me.
Well, the biggest thing for me in my business is it's not just the face-to-face up front. I'm available. Call me after. 6 months from now, if you have a question, if something goes awry with your escrow account, call me.
Right, yeah.
Come into the office. Zoom call. We're here.
You know where we live.
We're not a robot. Right.
Yeah.
But, hey, let's wrap up the show. What would be what's some words of wisdom to our real estate professionals and our consumers out there? Any last words there?
Enjoy the ride.
Yeah.
And we've been in it a long time. We've had a lot of ups and downs, a lot of different markets, and not one of them is the same. Even though we feel that it's the same, it's not the same. Just enjoy the ride.
And it's still a great time for first-time home buyers to get in the market. Don't be scared about interest rates. Don't be scared about prices.
Values.
Figure out where you want to be. Let's figure out a path on how to get you there. And, in a lot of cases, becoming a homeowner sooner than later, when you're ready, is probably a very smart thing to do.
Yeah. So some words of wisdom from some very seasoned professionals. 1, use a realtor when you can. They are worth their weight in gold. Use a certified mortgage advisor. They are here to help you. Meet face-to-face if you can. And don't just get a mortgage. Work with someone that can design a quality of life. For Danielle Boote, Jennifer Coppola, and myself, Victor Bals, we thank you for a smarter way home, and we all got to try to get along.
Together and make this world better.